with the beginning of any recession, you would expect commodities to go through the floor. And that's exactly what's kind of happening. And as I've been alluding to over the past several months, when everyone has been speculating to buy more and more oil and commodities, I honestly think that the market is somewhat saturated, to be quite frank. And I think that the demand is wobbly at best. I think that with the midst of this recession that we are going to be announcing in the next several weeks, as 2Q has just ended, I believe that we will be reducing the amount of consumption and thus reducing the amount of demand coming into the pipelines that people will be using. And that, of course, only needs 1 to 2% of supply demand imbalance for the oil price to drop drastically. Now, I think a lot of people that have been following this have known that oil prices have been elevated over to $120 a barrel since the February timeframe, mostly due to what's going on in Russia and Ukraine. But I think a lot of people are not understanding that truly in the second half of this year, demand is beginning to soften while supply is beginning to come back up, with the United States coming to fruition with the Middle East, while not coming up as nearly as much, which I believe is what is causing this deficit that we're kind of go into in the second half of the year, is really what is driving the price. Now, the fact that you have any sort of 1 to 2% demand decrease with people driving, less, as people needing to go into the office less, with respect to people working from home, also people just unfortunately being laid off, and as well as the fact that prices are a lot more expensive, people are choosing things like bikes or public transportation in order to get to work, and that would then obviously drive down demand. Obviously, as we've seen in 2008, I think that this is going to be a replication as a recession kind of looms. You're going to have a large demand destruction, which is going to send the price down. I believe that less than $80 a barrel in West Texas Intermediate is foreseeable, personally. And for those people that are, say, upset with the words that are kind of coming out of my mouth, with a potential impending doom coming into the oil markets, which I don't think is true, I think you can just have a little bit of cautiousness as you approach it. Could be a great opportunity to pick up some names, especially if some things get oversold. I've already believed that some of these names are somewhat oversold compared to the great companies that we're going to be seeing report here in the next couple months, having great refining margins, historic refining margins compared to where a lot of people have been in the past. I know $12 to $15 for crack spread is pretty normal, where we are going to be seeing upwards of $40 to $50 for crack spread in this quarter alone. So refining margins alone are going to be absolutely phenomenal. So companies that I'll be looking for are BHP. That's not necessarily just oil. They sold off their oil division, but that's more so other commodities, which have obviously been seeing the toilet as well. But also be looking to pick up Shell in a down market as well, and continue to look at other small independent companies that don't necessarily have refining. Cosmos is one that I did really well in during the pandemic that I'll potentially be looking at picking up as well. And then also potentially Apache, if that goes down. I believe that they have a lot of legs in their recent discoveries that they had in Suriname, and they could replicate very similar to what they've done, what Exxon has done in Guyana. So I hope you guys listen. Don't necessarily think that this is going to go back up. If it does go back up, it could be a short-term relief unless something drastic happens, unless a further escalation in Russia-Ukraine happens. I foresee that this demand destruction will continue as we continue into a recession, and I think we will be going back down to at least $80 a barrel. Personally, I've been wrong before, but I was right the last month and a half or so, when I believed that I should be getting bearish on oil when everybody was picking up. Now, I've been wrong plenty of times, so I'm not saying, I'm the holy grail, because that's far from true. But this is just my thoughts. I'm still bullish on natural gas for plenty of reasons. I think I can go a whole nother video just based off of that. So companies that are strictly focused on natural gas, I think that this is an area where you can kind of be a little bit less cautious. I think that natural gas is continuing to become a more global commodity rather than a localized commodity. And projects that were not originally thought as being economic are now looking to be looked at again, just based off the fact that European natural gas prices and Japan gas prices are back up. Spot LNG prices are back up compared to where they were. And you're also going to have more and more of these LNG export terminals being built in the United States, which is going to more globalize the LNG and natural gas prices here in the United States, which have been historically low up until rather recently when we started to export more and more to Europe. But anyway, that's my 2 cents on the oil and gas market. I'll talk to you guys soon. Cheers.